It is a big day on Wall Street for AI. There are high expectations for Nvidia reporting its fourth quarter results after the bell, and investors have been retreating from the AI juggernaut, sending shares down over 4% on Tuesday at least. Nvidia, along with another big AI play, Palo Alto Networks, pulling broader markets down with them. So what impact can we expect artificial intelligence to have from here? We've got JoAnne Feeney, who is the Advisors Capital Management Partner and Portfolio Manager. JoAnne, great to have you here with us this morning. Just AI as a portfolio play right now, where is the setup now coming off of Palo Alto and going into Nvidia from your perspective?
Yeah, good morning, Brad. There's a lot of opportunities in AI. Obviously, Nvidia is among the most attention-grabbing of them, and rightly so. It's the picks and shovels, right? It is what makes AI applications possible. And so it'll be interesting to see what they do tonight. We can talk more about that. But there are a lot of other ways to invest in AI. There are other chip companies, like you mentioned, AMD, but also Broadcom. And then there are also the software companies that are developing those applications, whether it's a Snowflake or a ServiceNow. There's other hardware companies rolling out AI capabilities embedded in their products. So there are a lot of ways to capture the value that AI is likely to bring to a lot of different sectors of the economy. And we're playing various options there, not options in the financial sense, but various investments there, depending on the strategy. Because, NVIDIA is not for everybody. It's a higher multiple, riskier position. It's going to be more volatile, may not be appropriate for, say, an older investor who's looking for income out of their portfolio, right? So it really depends what your strategy is, what your goals are for investing, how you want to play AI. But there is a solution, there is an opportunity for every type of investor here.
JoAnne, let's talk about what we heard from Palo Alto Networks after the bell yesterday. Obviously, some concern there. There has been some commentary this morning saying that maybe this signals weakness that we could see more broadly across the AI landscape. If we do see Nvidia disappoint on any metric tonight, what do you think the impact is going to be more broadly across the sector? Could we see a number of these AI names under pressure as a result?
It's entirely possible. I mean, clearly, NVIDIA's outlook is going to shape the investor view of what is possible from AI and all those related AI plays. But I think that you have to differentiate between the capacity to run AI training and inference models, which is what NVIDIA is enabling with all its super duper graphics processors. You have to separate that from how AI is being developed in applications. And, one doesn't necessarily imply, the other. So if NVIDIA, for example, has a little bit of a slowdown in the sales of its chips, which, by the way, we think is unlikely, it doesn't mean that services companies aren't picking this up and seeing lots of sales related to AI. So I think it would be a mistake for investors to read too much into NVIDIA's results, particularly on the application side.
Where did you expect some of that? And eventually there is going to be a life after NVIDIA that we have to think about too, in terms of some of the massive run up that we've seen. There's these different pillars of generative AI where you've got the applications that sit on top of the language learning models and those models that sit on top of course, the chips powering the data centers as well. So where is that next portfolio pivot, perhaps, that's still within generative AI, but is later on towards the kind of consumer appreciation or realization of being able to have hands-on some of these solutions?
Yeah, right. So you've broken it down really nicely into you think about three buckets. First, you've got the chips that make it possible to build the servers to run the AI training and inference models. Then you've got the folks building those servers and making those services available to not just the consumer through, say, a ChatGPT, but also to other software companies that are then developing novel ways to use AI. So there are three areas. So yeah, you can say, okay, at some point, the growth in the sale of the chips may slow down, right, eventually. We're, I think, a long way from that, given how much demand is sitting out there. But then the consumer-facing opportunities we think are in companies like Amazon, Microsoft, Apple, and other potentially social media plays or retail plays. So what did the consumer get out of using large language models like ChatGPT? So that I think that the Microsofts and Amazons of the world are going to have a very long runway as more and more consumer-facing applications get developed. And then the third bucket are software companies developing applications for, say, the business world, for how to run your factories better, for how to manage your operations more efficiently. Companies like ServiceNow, Snowflake, Companies like Palo Alto, who are going to make cybersecurity smarter than it has been able to be in the past, which, by the way, is a company we've owned for a long time, I think since the last time its stock fell off a cliff. And we shouldn't read, by the way, too much into that slightly weaker forward guidance. We think the moves they're making here to change slightly their business model and their go-to-market strategy is actually very smart from a perspective of getting over the big switching costs that their new potential customers face.
JoAnne, the drought that we're looking at here, off just about 25% pre-market, it sounds like you think it's an overreaction.
Oh, yeah, I really do. I think what you have is a lot of, short-term holders that recognize that, hey, the next few months could be a little bit bumpy. They've clearly brought down their orders guidance, and I think that's really hurting the stock. And there are questions about how much growth they can generate in the next 6 to 12 months because of this shift in go-to-market strategy. But when you look into that shift, what does it portend for the future? And you see a lot more potential for the company to take market share, which ultimately is a very good thing for where they're going to end up in, say, 2 years. So long-term holders should view this as an opportunity. If feel like they've missed Palo Alto, this is a great opportunity to get in. They have a modest position. This might be a really good opportunity to increase the size of that position, because ultimately this strategy that they've rolled out, that I talked about last night, is one that's going to help them gain market share with bigger contracts with longer duration. And it's going to be a little bit painful up front because they're going to basically give away some services while they're helping their new customers to transition. But ultimately, it's a really good strategy.
Yeah, certainly. Well, we have seen some of that concern being stretched to some of their competitors out there, CrowdStrike, Fortinet, Zscaler, among those in the red today. And what you're saying might be an overreaction on those stocks as well. All right, JoAnne Feeney, Advisors Capital Management Partner and Portfolio Manager. Thanks so much for joining us here this morning.